Good evening, everybody. It was just talk with Jim. They had a rainstorm or hard storm over there, and it's only 77 degrees. It's still 89 degrees over here. So you know it's hot when your big activity for the day is to walk out to the pool, step down in it, sit on the steps, and just sit there. Okay, let's see, before we get started, some people were wanting to find out a little bit more about the private training session, which is scheduled for August 15th, 16th, and 17th. Unfortunately, it won't be at Cuca Lake this year. I was hoping that maybe the coronavirus would slow things down, but I've got a buddy up there that owns a house up there and said it's more active on the lake this year than he's ever seen it. So everybody's doing their safe space out on the water. Here is just north of Pittsburgh in Cranberry Township, Mars, PA. So we're going to have the training session here. Unfortunately, it'll be a little bit more sterile. The ambiance was that while we were at the lake, when we got up to stretch our legs, we could at least step out on the deck and overlook the water. If it was real hot, which it hadn't been for the last few years, we could jump in our bathing suits and splash around, cool off, come up, dry off, and then sit through more sessions. So, but a couple people wanted me to explain a little bit more what was involved in the private training. Usually we have 5 people on average sit through it. The reason for that is the group is small enough that I've already assessed, or we've already discussed what their trading problems are prior to the session, so that I can kind of incorporate that into the training session. And the session is big enough that if you're sitting there at any point in the day and you're getting a little bit brain fried and lethargic, somebody's usually going to ask a question that you would have probably asked yourself at some point if you had remembered it. So it kind of keeps the learning process pretty well stimulated. But we go through the whole gamut, starting from the 12 major signals and the patterns, then we go into the high profit patterns. But it's more oriented toward the person that is wanting to probably trade for a living, or at least a good portion of their income from here on in. First candlestick race trader on Mars, that's right. As a matter of fact, the town square in Mars is about the size of a pickleball court, and it's got a spaceship sitting in it. But the whole process is even more intense, or more, what do I say, defined than just our normal 2-day training session, because it's where somebody that has a flaw in their trading or their thinking, that when they ask a question, we can concentrate on it for the next 5, 10, 15 minutes, and then keep enmeshing it into the training session. But usually, if somebody has a particular problem, it's not like everybody else sits there bored. It's usually the same type of problem most people have, and definitely want to find out what the solution is. And the nice thing about the probability of the candlesticks is that most problems, which is usually contributed to emotional trading, the whole process of seeing what the probabilities are based upon the candlestick signals and the whole the concept of investor sentiment moving prices, it kind of self-dissolves that reliance on emotional trading. It kind of makes it disappear, so that you're trading more on probability logic than you are what do I finish the sentence here? That you're now looking at your trading investment program on logical results of investment results from the candlesticks from 400 years of identification of what should happen after a candlestick signal or pattern, and much less on what you think should happen. And the reason I can teach this very well is because I went through years of thinking something was going to happen, but the candlesticks were telling me differently, and it didn't take me very long to discover that the candlesticks were usually right and I was usually wrong. So once I got acclimated into my own mind that I do what the charts tell me, I start coming way out ahead. Okay, let's see. Scott, we used to do this. We do the private training session just once a year now. And we usually saved it for August so that we could do it at Keuka Lake. But the people that I rented the house from for the last 7 years renovated the house and decided to move in it themselves, so I lost the house. And the demand for houses rentals up there is so tight that by the time I found out that I couldn't get the house back, I couldn't find another house to go after. Which means we're just going to spend a lot more time going through the process of analyzing charts and less this year of going to the wineries for lunch and that sort of thing. It was Keuka Lake, K-E-U-K-A, one of the Finger Lakes. Okay. Oh, so the price is $4,900. Now with that $4,900, it's a 3-day weekend with a 3-day training. Plus, you get a year of free membership to the website. Plus, I think we've got $5,500 worth of training information on the website. That once you go through the training, all you have to do is email Abraham and say, I did the private training session. Can you send me this training video or that training video? You've got access to all that training video for free. Yeah, you can go back to the my swimming pool. You just don't want to take my seat on the steps. I can't go boating. Yeah, I do have a couple big rafts that I doze off every now and then. Okay. All right, so we had a good day in the market. Market came out strong and stayed up most of the day. And then they started buying going into the close. Let me see if I've got the... So here's what it did all day, just hovered. And then in the last 30 minutes, it started coming up another 100, 150 points going into the close. But here's the strong chart. Notice what the NASDAQ did today. Let me make this big enough. There was kind of a what's happening here? Oh, I hit this right. There's a little resistance level right here. And they actually gapped up to that resistance level and went positive. That's a very strong indication that this resistance level potential is not going to be a resistance level. That we might now be in another strong wave 3 situation where we had this going on, consolidation, now maybe another magnitude move is this, which both indexes kind of imply more upside. To fill the gap here on the Dow and the NASDAQ gapping up through the resistance level, the S&P 500 more than likely to fill this gap, and even the transportation index popped up, where making the 200-day moving average a viable target. Crude oil has held up. Currently trading at $40.75, which is one of the cogs of the economic wheel that apparently the energy or the crude oil area is not going to be dramatically affected by the big drops in prices, that they're back up to a when I say business creating price as far as crude oil. See what some of the others are doing. Gold, slow, steady uptrend, staying above the T-line. I think I saw soybeans. Yep, they were up, and look at the little kind of scoop pattern. Where do you think the next likely target's going to be? After they did a morning star signal right off the 50, where do you think everybody else is watching? Yeah, I just sometimes am amazed at the intelligence of, this is natural gas, still historically very cheap. Now even that was cheap. And it came from this level, so we're still way very cheap on natural gas. I don't think natural gas is ever going to go back up. Now, I said the same thing about crude oil because of the extent of production that we've been running into. But I think I said it right about here, and it went to here before the big crash. But there's two major factors that, and again, as soon as I finish this statement, please disregard it completely, because whatever I say doesn't mean a hill of beans. But the fact that they have found fields, one, again, the Balkan field up there in North Dakota, and another huge field in West Texas, and another big field up on the north shore of Alaska. That alone is going to keep the supply of crude oil pretty excessive for at least another decade. I say at least another decade. They're still developing these fields, It's going to take a while to get all that crude oil out of there and set up, but they're in the process of doing that. And then secondly, technology keeps improving dramatically every year as far as methods for finding the crude oil or the natural gas and then going and getting it. So I think right now natural gas, there is such a huge supply of that. We're going to be looking at low prices for at least a decade. Gold, yeah, gold is more of a, that's not what we want. Gold is more of an emotional indicator. But I think the reason gold goes up is, if you remember that the chart is telling you the accumulative knowledge of everybody buying and selling, that the metals, the precious metals are going up because I think there is an underlying nervousness about what's going on in as far as China, Russia, all these areas that could, or countries that could make, or throw all the world situation out of whack, that gold is something everyone is trying to get a piece of in their pocket. I don't even know about copper. I don't even know whether I can get copper up here. Copper going up steadily, yes. That's true too, Jay. DJ, that could be true, but the one thing that everybody does not build into their statements is, with all the money that's being printed, not only in the U.S. but around the world, it's not like it's a surprise. It's built into all economic factors or economic prices on a daily basis. That is not a surprise out there. If everybody knows there's a lot more money sloshing around or a lot more money being printed, it is offset somewhere. I mean, everything has its natural reaction. Okay. And all the residue oil in the Gulf of Mexico, yeah, they're, as you know, Sandy's pretty heavy in the oil area. So I asked her, I said, where do they find all this new oil that, I mean, they dry up these fields and have to move on. But the reality is, the reason there was oil in those fields was because there was a supply of oil somewhere deep in the crust somewhere, looking for a place to get out. And so when they empty out an area of the crust where the oil had been sitting, that means eventually that oil seeps back into that same structure, and there's another supply of oil to go after. So that's why going in and re-drilling wells is always very economical, because all they're doing is tapping into that new supply that has been flowing up from underneath. So anyways, we're way off track here. So here is a lesson. You can see how GSX opened positive and started trading lower. Now, in this case, it wasn't as crucial, but this is still probably a buy, especially if it starts trading positive, because of the wave one, wave two, that little doji gap up going into wave three. But something like this is more relevant than where you see it open. And this is why I want to make this very clear, because I get so many people say, well, I bought XYZ on the open and immediately went off. What did I do wrong? The answer is, all you had to do is wait 90 seconds, 2 minutes, 3 minutes. But if you see it open and it immediately starts selling off, there's no reason to rush into it. When you get into it would be when it comes down and then comes back up through the open. That tells you the initial profit taking is over. Now it's confirming why we're buying. So if you see something open and you can see immediately that that candle is red, it means the buyers aren't there just yet. I would rather be 45 cents late versus, meaning buying it up here versus buying it right away and then sitting in it through a day like this, which this would have been a non-execution day. Ray, yeah, I've often wondered that myself, whether oil is somehow not necessarily all the crushed up dinosaurs and fauna. It might be, because it might be, we're looking at trillions of years, but whether oil is a natural substance of some source from deep in the earth, that there's still a ton of it. Okay, now let's see, back off track again. Here we go. And then VIP's kind of the same thing. You can still see the pattern. So even if you bought it on positive trading today, you still have your next strategy, which is, as long as this fry pan bottom J-hook type pattern is above the T-line, you really want to see it start coming back up again. You don't want to see it come back below the T-line. If it starts trading below the T-line, what's it telling you? That obviously this was a resistance level, and two, this trajectory of strength has disappeared. Now you might at best just be in a sideways, or you hit a double top, close it out. Now, I say that very nimbly or glibly, close it out, because I've become much more nimble that if I see something not working, I close it out, because there's something out there that is working like this. Why sit in something that you have some doubts about? Close it out and move to something like this. You'll find that the emotional trauma of buying here and having to sell out here, thinking, man, what did I do wrong? You didn't do anything wrong. You just hit a trade that didn't work. Close it out and go find one, because we know that the probabilities of seeing a pattern is going to put you in positive trades probably approximately 70% of the time, which means 30% of your trades aren't going to work. Take that into account very quickly, and then move to one that has probabilities of going in your favor. Let's see. Okay, all right, ready? Okay, let's see. So here are the ones that are working. We bought pins yesterday because of this expectation that if it opened positive, you had a doji sandwich breakout. So that one was working as far as options in the options room. The steady eddies continue to work. Apps, Vivo, still working. SRNE, still a fry-pan bottom setup. So this is the, I guess, my relaxation of, or not relaxation, the lack of anxiety about being in positions with the market moving one way or the other is the more I'm in the patterns, the less I'm anxious about which way it's going. I know the probabilities. I stayed in VIP. Should I have closed it? No, because you're still in that fry-pan bottom. If I bought it when it was positive and shortly after I bought it, it went negative. Yep, Kirk, that is the magnitude of your probabilities. But if we see this opening positive, the probabilities were that it was pretty good, that it was heading in this direction. The fact that it didn't close back below the T-line didn't change the trajectory. Might have changed the timing. It might have to be another day or two for it to get started. So we could see that same scenario over here where we had the fry-pan bottom breakout, but it took a couple of days again to get going. But the fact that we could see that it was in this big pattern told us we just hang on to it as long as it doesn't close below the T-line. Richard, you can, if it is what you consider your best trade setup. It could be, but we might find a few more. So it's something that you can watch, but if it does trade positive and start moving back up, yes, you want to be buying it because what's it doing? It's still confirming that trajectory. The target, don't know. I would suspect that it could get back up into this area, which means you're looking at about a 45–50% upside potential. Aren't all these Chinese stocks a little risky since Fed said they were going to delist Chinese stocks? It could be, Sean, but remember, what is said and what is done does not dictate what the price is going to do. Bidu jumped a breakout, a Chinese stock. This goes back to the concept: do what the market or what the chart tells you, not what all the announcements do. Bert, if you're having problems, go up to the red X way up on the top right-hand corner of your screen, click it, log out, and then log back in and see if you can't get a better connection. Okay, so anything that you can recognize as a pattern. You can see what's happening in LVO. Pretty much a steady eddy, but kind of a fry pan bottom, J-hook pattern. That one can still be bought. Oh, if you're overdriven and under-modulated, too loud, and maybe clipping. I don't know. Yeah, you're always way over on the right-hand or left-hand side of your screen underneath the list of names. There's a speaker there. You can change the sound if I'm too loud, which I'm often accused of being. So here's what we want to find out, or here's what, I guess this will be a segue into not this coming weekend, but 2 weekends from now, the 18th. We will be doing a full-day training, which is kind of the accumulation, a culmination, the narrowing down of the information that's built into candlestick signals and the patterns. And then there's about 12 or 14, maybe as much as 18, I can't remember how many I stuck in there, that produce high probability, high profit trade results. Now, when you do one of those sessions, you're taking the accumulative information that is built into the candlestick signals and patterns, and now we're identifying what combinations produce the biggest trade results. I think tomorrow night we're going to be doing a kind of a practice session on the best friend signal, which is your doji gap up. And anytime you have a doji involved in a signal, it's going to be a little bit more powerful as far as a reversal and the strength of that reversal. So that's the top signal or pattern that I put as number one. Now that doesn't mean number one is any hugely beneficial over number 18. They're all good. But what I've discovered in the past is I have so many people come back, or I say so many people, a bunch of people come back and say, man, there's just so much to learn here. I can't put it all in my head. The answer to that is look at all 18. But there's going to be 3 or 4 that really kind of stand out for you. And my suggestion is you become an expert. Know those patterns inside and out. And you become familiar with the other ones so that they can add to your analysis of the ones you are concentrating on. But if you learn 3 or 4, I can pretty much guarantee you'll still have more trades than you'll ever be able to handle, which means you can be cultivating the number of trades that you have available down to the best ones that give you the best probabilities. Now, what that does for you, meaning each individual... Oh, I need to turn down my mic? That could be. How is that? Is that any better? Okay. Now I forgot what I was saying. Oh, so if you become an expert at 3 or 4, what that does, yeah, we're going to do what do we have tomorrow night? What is tomorrow night? Tomorrow night is the 8th. Now, tomorrow night is the 7th. Or maybe, no, maybe it's on the 9th. Okay. Now I'm all confused. On the 9th. No, what did I do? I'll have to check. Forgot what Abe sent me. I don't have it marked down either. I just looked at my calendar, so maybe he was referring to Thursday night. We're going to be working on the dojis. So now where was it? So, okay. So if you learn 3 or 4, what that will do is that will solidify your confidence in the signals and... Oh, okay. So there is something tomorrow night? All right. Well, if it is, it's just for the members. So, okay, so there is something tomorrow. All right, I guess I better mark it down, or I'll just be floating around in the pool saying I think there's something I'm supposed to be doing. I don't know what it is. Oh, and I'm trying to finish this point. The point is, if you know 3 or 4 signals and patterns extremely well, now you don't have to depend on anybody else's analysis. You don't have to worry about what the rhetoric is out on the TV stations. You can look and know exactly what should be happening when you're analyzing the signals or patterns that you've become very adept at. So You closed out early today. On BE, last week. Right here. All right. So here is the 2 plus 2 that you always need to keep from getting yourself whipsawed. Your best friend signal. And remember what we have always said about a signal. The bigger the signal, the more compelling there's been a change of investor sentiment. When it opened down here, if you got out of it, you started watching to see if there's still going to be some more buying. When it opened positive today, especially when it went up through this level, it just told us that this signal right here was still working. And the thing that did not negate it was the fact that after a strong best friend type signal, they haven't been able to close it below the T-line. Same scenario on AAOI. Your left-right combo, kind of a convoluted cradle pattern. Sold off. Where was the buy? The buy would have been either on this day or this day, today, because it came back up through this level. And why would you be buying after this consolidation? Notice where the consolidation went to. When I say right smack dab to the T, think of what that means. That means it moved right back to our indicator that nobody else has on their charts. The T-line, a natural support and resistance level of human nature. We can see where that natural support and resistance level is because it's kind of built into the T-line, the 8 exponential moving average. So when it bounces off that, what we know is a natural support level, that tells us we still should be looking to the upside. Yes. So the other side of that coin is if you got out for some reason, remember this. Remember this. That when they break out to the upside, now something like this, that wasn't as good because where did they close? They closed this as a bearish harami way down at the lower end of the trading range. They were still buying, and we could see that, even though they opened it lower and took it down on Thursday. No, that was Thursday. Wednesday, they were buying it going into the close or at the end of the day. That's the difference. Knowing that it didn't close below the T-line, you had a buy signal, and they were still buying. Keep an eye on that trade. So that's working extremely well. Where is your upside target? Well, we can also see what everybody else is watching. Where would be the breakout level? It broke out through the breakout level. That means now we're in no man's land, which means it could go much higher. Okay. Some of the other ones that we're holding, GNMK, nice steady eddy. Look how big that breakout candle was. There's your steady eddy. And what was the underlying factor of this trend? It's never been able to close below the T-line. For BE and AOI, if you have a nice considerable gap up and you bought calls, you tend to sell half the calls immediately after the open to put some cash back. Joseph, that's up to each individual. I usually go on the basis that if I see a candlestick buy signal, I hold until I see a candlestick sell signal. With the caveat that if I happen to have bought calls here and I've got huge profits up here, yeah, maybe I start taking off some. Maybe a third of the position. So there are times where, for example, Today I was just kicking myself because I had calls on Zoom, and it was up 12 bucks at one point today, and I had huge profits. And I'm sitting there thinking, I should probably take at least half this position off. But you remember the old saying, greed has killed more men than lightning. I thought, well, maybe this is going to be one of those that they're just skyrocketing. I'll sit with it. Well, you saw where it closed. I gave back everything. And so the other rule of thumb is do as I say, not as I do. Okay. So our positions like in Overstock now has a different view. You can see the trajectory. Now you can see what's happening. There's something new going on, but what's our little warning flag? Look how far away we've moved from the T-line. So now you start watching to take profits. That's right. Well, I've been killed many times by the market. Yep, gap up in the overbought condition. Remember what happens when you start seeing that type of trajectory. Where was the T-line on Tesla during this whole uptrend? Now where's the T-line compared to where Tesla is right now? Remember back here where we were on this uptrend, and then what was happening. Look how far away you started moving from the T-line. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, which is watching to see what happens with human nature. If this started up further, I think somebody upgraded it to, what, 1,500? Well, if it gets there in a hurry and your T-line is still down here, you go immediately to your 10-minute chart. Up another 60 bucks, all right. I got way ahead of myself here. Our gold stock positions, this is what you look for. Gap up, gap up, gap up. Now you're in that 45 degree. When they start gapping up, you start, in this case, the Japanese rice traders say if you go from the overbought or the oversold to the overbought very quickly, get ready for profit taking, which it did a little bit in here. But what was our underlying factor? Never closed below the T-line. Oh, I didn't need to do that. Now we have gold still on a slow, steady uptrend. IMMU. You can see the J-hook pattern, the kind of the classic fry pan bottom J-hook. You stay long until you see a sell signal. Roger, hang on to your individual ones until we get there. Crude's one of the top ones on the list of the ones that we're going to be looking at. So that's a nice little best friend gap up. But let me get through all the ones that we do have. Then we'll get to the ones that we are looking at. So you can see what's happened here. This is where I got most of my education from candlesticks. Look at our little slow curve breakout. Now what do we expect? Well, another little J-hook pattern and or a 45 degree. Yeah, hold on. I think I've got Workhorse over here somewhere. So, yeah, well, hang on to keep these questions. I'll come back to them. I'm just want to get through the ones that. So here's the Ecom. It did a left-right combo yesterday. Friday. Thursday. What is today? Monday. And it didn't confirm. So what's that tell us? We're still in this fry pan bottom trajectory. So that was just a sell-off day on Friday. ARCT, another one that's been in a steady uptrend, but notice the wedge. Makes this very simple. This one's going to move in the direction of how they open tomorrow. Oh, did I not finish? Oh, I think I did. So if this is wave 1, expect wave 3 to continue higher. I would, that's what, 17 to 30, 13 points. 13 points from in here takes you up to about the $40 to $43 area. If NVT opens lower and trades lower tomorrow, it makes sense to wait until the end of the day to see if it remains above the T line. You want to probably now trade it on the basis that you're in the overbought area, you have a doji. I'd have a safety stop right here at the low of today, because where is the low of today? Right smack dab on our 3T line. That would kind of give an indication that if they came down through there, they're probably coming back at least to test the T line. So I might take profits there and then just wait to see what it does once it gets back to the T line. Oh, and I better do these right now or I will forget. Overstock. If you've got profits, yes. This is the area where if they open this and start taking up some more, I'd flip to my 10-minute chart. And if it came back down through the 10-minute chart, I'd start taking off some of the position. And NIO, same scenario. I don't know where this came from. But you can see what the magnitude of this move is. The magnitude of that move is almost the same. So if I was long this, which unfortunately I'm not, I'd have a safety stop at today's open. If it came down through there, that means some of the profit taking is already hit. Again, that alert being based upon the distance you are away from the T line. FRTA, 45 degree. Again, look at your best friend type signal. Bullish Harami spinning top, gap up, 45 degree. What was the other one that we just looked at that has that same? Darn, I thought I'd be able to remember. Was it NVTA? Somewhat the same thing. All right. And UPS was one that we put out a recommendation on buying the calls when it came up through the bobble breakout. Got a little bit iffy in here. If this had opened lower the next day, that told us they failed up here, but they opened it positive and then popped it on earnings. So what do we expect now? A 45 degree in this one. MDLA, we're way behind the schedule. It's almost 9 o'clock and we're not even done with our own positions yet. So MDLA, you stay long on this one. You can still be buying this Morningstar signal scoop type pattern, especially if it comes back up through today's open. And Sage had a good looking chart. Yep. But now has gotten a little bit soggy. You're still up here at the breakout area. You still haven't really closed below the T9, but you've only got one strategy at this point. It has to open positive and trade positive to stay in it. Now, there's sometimes when charts look good, then all of a sudden that industry or that sector gets left by the wayside. We closed out Codex today because it did close below the T-line. And what did that tell us about our fry pan bottom trajectory? It's still there, but even if this comes back tomorrow, it's still a fry pan bottom trajectory that may not be moving very fast when there's probably a lot of better opportunities to go after. Maxar, kind of the same situation. The market was up 450 points. Maxar was off $1.44. This one should have been closed out today because it told us the trajectory is now gone. Take your money and move it someplace that's going to look a lot better, something like this. Where should I send an email to request hopes to set up? The 310 line JH is merely just putting the 3 exponential moving average on your chart. Maxar could be a short. But in this market, I've got some better shorts to look at, which we'll get to. All right, we did Tesla, Amazon. Look at the trajectory. You can see how it hugged the T-line this whole way up. Now look what's happening. You got a bullish doji sandwich, but you're starting to move away from the T-line. Just be careful. Now, does that mean the uptrend is over or getting over? Definitely not. But the short-term basis is the simple fact that the further away you move from the T-line, the higher the probability people are going to start taking profits. You just want to be aware of that. Facebook, you stay long on this one, as long as it stays above the T-line. Obviously, you want to see what it does at this level. Make sure it can get out through the resistance level. Apple held up, continuing the uptrend with a kind of a slow curve. Netflix, still trading positive. You just stay long if you're in this one. B-Burk, my basic standard is 10 positions maximum. And we can go into that some night when we're not way behind schedule. But the 30-second reason is that if I've got 10 positions on, I'm not spending all night. I'm spending maybe 90 seconds analyzing those charts, just visually looking at them. If there's one that looks iffy, I have already done my scans, and I have found 5, 7, 10, 12 good chart setups that if I've got something iffy that's going against me, close it out and move to that next position. Now, what that keeps you from doing is saying, oh, I've got 10 good positions on, and I've got another 2 that look excellent over here. I think I'll just buy 2 more positions. Well, now you've kind of dissipated your discipline, because if I want one of those positions, I better go back through and say, all right, which ones of my existing positions am I going to close that looks, even though it might not be a full-scale reversal, but I'm up in the overbought area. I'm starting to see a little bit of sogginess. I'm still above the T-line, but am I better off taking profits in that position and moving over to one that has much lower risk? It's just coming out of an oversold area and starting the uptrend. What that essentially does is keeps you from hanging on to positions that might be ready to turn over, and keeps you constantly moving your money to better probability situations. But we'll go into a money management session some night. Does that include option positions? Yes. Yes, each night. Oh, does that mean, well, I kind of use the illustration that if I've got 10 positions, let's say I've got a $100,000 portfolio, I've got 10 positions, well, maybe one unit, which is $10,000, becomes my option trading unit, and maybe in that option trading unit, I've got 3 positions. So now I'm at 12 positions, which is still isn't outlandish. Yeah, 10. Now, if I'm doing a $1.5 million portfolio, maybe I've moved it up to 14 positions. Still not the process that I try to get away from is Susie Orman telling everybody they shouldn't have any more than 4% of their money in any one position, which means you've got 25 positions on. Most people can't even manage 6 positions. Or let's put it this way. They pay analysts millions of dollars on Wall Street to analyze 6 positions, and most of them can't do that very well. How do you think you're going to do trying to analyze 25 positions all the time? Do you see the price of a stock on net change basis or open versus close? No, I don't know what you mean by that. The price is, I mean, the chart analysis is where is it open and where did it close? When you buy stock and options for the same entity, how do you allocate? Oh, MT, that's a whole different process. We'll discuss that in options trading night. How's that? Okay, now I'm off track again. Where was I? NVIDIA. Another one. It's got kind of a McMuffin, Morningstar signal, double doji sandwich. You're right here at the breakout level. If this opens positive, that gives you a good breakout scenario. And Zoom we did still in an uptrend, but you had kind of a shooting star, stochastics heading down. So even though I didn't take profits up here, now I've got to reassess what to do with this chart, which is very simple. Whoops. If this opens lower tomorrow after a shooting star, it's time to close out the position. A McMuffin is a morning star followed by a doji sandwich. Which ones were they? There's a morning star signal. There's your doji sandwich or your morning sandwich, a McMuffin. Yeah, so anyways, it doesn't take very much to be a financial expert on these TV stations. So Cree was a good-looking chart. There's your best friend gap up through a resistance level, probably 3. So you can be buying this one on positive trading tomorrow. And net, you can see the trend kicker signal. I don't think this room appreciated my evaluation of net the other day. When somebody asked whether they should buy it, I said they should buy it and sell everything so that all they had was nothing but net. How's that a trend kicker signal? Because it opened here and closed here. Today it opened at or above the previous day's open and went positive. That's your trend kicker. That means there's more upside. Aloe. That one was acting better earlier. This one can still be bought if it trades up above today's open. Because you can see how it's got a little slow curve. You're starting your uptrend of a fry pan bottom. Now, why would you buy a fry pan bottom if it's not very exciting? Because some of them that if you bought here and it came back up to the breakout level, that may be a 20% move. That's still a good, decent rate of return. Now, if this was only a 7% move, probably wouldn't pay attention to it until it got to the breakout level. Aloe. No, this is a fry pan bottom where Zoom has been a nice steady uptrend, but now we're starting to see potential sell signals. Now, I say potential sell signals. I think it was trading, bidding 262, asking 263 after hours. Then it looked like the futures were up some more after hours. Salesforce. This is your McMuffin. Morning star signal followed by a doji sandwich. Now, the doji sandwich, in this case, was the morning star signal, strong candle, doji, strong candle. It could also be morning star signal with a strong candle, doji, strong candle. But you can see the setup is the same. This candle confirmed the morning star signal. The doji sandwich confirmed that there's going to be more upside. So this makes for a very strong chart. Yes, the doji sandwich. The expectation from a doji sandwich is more upside. So if you know the 12 major signals, you know the morning star signal is a strong reversal signal, especially if it confirms the next day. Then, if we know that the doji sandwich, we expect more upside, when you combine the two, that's just double confirmation that the bulls have taken control. Oh, that's where it was, yes. So there's your other doji, or McMuffin. All right, so some good breakout charts. There's your breakout. There's your slow curve. That tells you more than likely you have more upside. WTH, there it is. There's your fry pan bottom breakout. So where would you be buying this one tomorrow? Anybody? What do we know about the doji rule? Positive trading. No, not necessarily the high of the doji. Positive trading. If it opens positive, you can start buying. First of all, you got a fry pan bottom. Secondly, you've got the doji rule that it's going to move in the direction of how they open after a doji, which then confirms, again, your fry pan bottom breakout. That would be a safe place to buy, but if I saw it open here and start trading up, I'll be a buyer. A little bit more conservative, yes, you can wait until it breaks out. What did we just do? Oh, CZZ. There's your trend kicker signal. It's a little slow curve. Breakout through the 200. What should we be expecting? First of all, the trend kicker signal is a very strong indicator there's going to be more upside. Secondly, it told us they weren't concerned about the resistance level at the 200. What do we expect after a trend kicker signal? More upside. What's our expectation? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. I wouldn't want to see it with the strength of this signal, because it's a kicker signal, I wouldn't want to see it come back below the open of today. Now that might seem like a good fur piece away from where it closed, but the probabilities are the trend kicker signal is very strong. It's going to go in this direction. Low probabilities that it's going to come back through this level. But if it does come back through that level, you don't want to be in it anymore. It didn't do what the high probability expectations were. Oh, whose handwriting is this? TGS. There's your kicker signal closing above the 200. If this opens positive, what do you got? A trend kicker signal pretty much bouncing off the 50 or a support level, going through the 200, doing a bobble breakout, and a trend kicker that would be starting your next price move. Isaac, you always have to put what which ones you're referring to, since we're moving along pretty quick. Whoops. And Freeport, there's kind of your trend kicker, inverted hammer breakout. You're in wave 3. Where does wave 3 start? Doesn't really matter. If this is wave 1, wave 3 could be anywhere in here because it's not an exact number. It's more that when you get close to the magnitude of this move, which is going to be approximately wave 1, approximately the same as wave 3, that's when you become a little bit more attentive as far as watching for potential reversal signals or profit taking. OCFT, there's your best friend breakout. What's your expectation? This opens positive, you're still going to be trading positive. BPY. That's what we expect after a gap up, breakout. Look for a 45 degree. So when I mention this, remember I'm going through this fairly quickly. If this is something that you can recognize, then you build your own strategy, saying, all right, I'm going to trade, this is going to be one of my 3 or 4 that I trade. When I see that big gap up breakout, and that's a 45 degree, maybe what I do is I buy some calls or I buy the stock, and maybe I do a spread up here to enhance those returns. Oh, SWKS. So there's that breakout of the downtrend. Slow curve. That one you can be buying on positive trading. Now when I say positive trading, that includes that we don't want to wake up tomorrow morning to see that the pre-market futures are showing that the market's going to open up down 320 points. That's probably not a very good environment to be buying. Tupperware, there's your bullish engulfing, there's your doji sandwich, there's your 45 degree. Where's your target? The 200. I don't know. And the only reason I say I don't know is I usually use the, oh, they had a failed FDA trial? Okay, thank you. Usually I have the news on my TC2000, but for some reason they have never updated the TC2000. Something happened on the news and they haven't updated. This is a very nice looking chart. MIO. Doji, 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 doji gap up through this level. You want to be buying this one. You will probably see this one on the recommended list tomorrow. For two reasons. One, because of the best friend. Two, because of the, I guess more than two, the dojis. Three, there's a little gap up here. So you're looking at a 20% move to get to the gap. And wave 3 could take you up into the $20s, $28 area. What is the risk of playing with Biotechs these days? Well, we saw today that there was a lot of let up on things that had anything to do with the virus. So you can see that also in Labu, how that backed off. So that kind of just told you that that sector may not have been as interesting to investors today if maybe the statistics of the virus or all the new cases wasn't as relevant as far as the number of cases versus the number of deaths that were occurring, which seems to be dropping. So the biotechs might not be the best place to have your money at this point. What was this one? SQM Squirm. Again, well, there's your best friend gap up. There's your first target filling that gap. So buying today would at least have you in a positive direction. In Kiwi, J-hook pattern. What's more relevant about this J-hook pattern? Look where the piercing signal occurred, then followed by a doji sandwich, right smack dab off the 200 and the T-line. What's our target? Wave 1, wave 3 up here someplace. Yes, so that's the problem with this virus is there are so many statistics being thrown around. Nobody really knows what's going on. So the underlying factor is, and I'll make it my case, I'm not smart enough to dissect what all the statistics are telling us. But I am smart enough to look at a candlestick chart and see what everybody else's decisions are based upon those statistics. So I don't have to be a smart analyst to say, well, this information is going to hurt or help the market or an individual stock. I let everybody else tell me in the graphics of candlesticks whether that information was helping or hurting the stock. Pay sign, there's another J-hook pattern, and what's the obvious? Look how the T-line acted as a support. Okay, what am I looking at here? This one I should have recommended today. Probably will still be recommended tomorrow with the bobble breakout. So, and SPWR, look at your trend kicker bobble breakout. Another one that has strong potential to the upside. A few more. Neat. That was a strong breakout today. Blue Apron. That's got a good fry pan bottom setup, starting with a best friend, or I'm sorry, a doji sandwich. And Crisp. There's your little hammer doji right off the T-line. Gap up, followed by a doji sandwich. Good steady uptrend. If you want to have some offset, meaning shorts, STAA. Somebody pointed this one out in the chat room today. A bearish left-right combo after a doji, 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 close below the T-line. If this opens weaker tomorrow, you can be short. Tank, we had been short. But right now, wouldn't be long or short. Would have covered the short on this day right here. But right now, there's really no strong signal to make you want to go after that one. And ZTO, there's your big bearish left-right combo. Another one that you can go short. Dollar Tree, bearish left-right combo. I would suspect at least coming back down to test the 50. And then Billy, same thing. The bigger the signal, the more compelling there's been a change of investor sentiment. So if this one opened lower, so if you've got, or if I've got 10 positions on, that doesn't necessarily mean I'm long 10 positions. I might have 8 long and 2 short positions on at any given time. Okay. Cree also had a good looking chart. So with that, are there any general questions on candlesticks? Tank is a longer, but you got to ask yourself, is there any reason you would want to be buying Tank other than analyzing it? I mean, if I look at this chart and I see so many other charts out there that are a heck of a lot better, why even spend time looking at it? Recapping the market, the Dow closed just above the 200. If it opens positive, there's your next target. Now, it might take 2 or 3 days to get there. So that means more than likely you've got 2 or 3 more days at least of upside. And the NASDAQ, ever since your bullish Harami confirmation, coming back up to the top of this channel, but there's an added benefit or added analysis that not only did they come up to the top of this channel, but they gapped up to the resistance level and went positive from there, implying they don't care about the resistance level anymore. Might be another strong, steady uptrend. We should wait to after the double line. Dorcas. It's basing, but it's not showing any great buying yet. I wouldn't buy it until you see a strong buy signal. Still a buy, still buy a bail, still buy a bail, still buy a bail. Stochastics and overbought and heading down. I don't know what a bail is, Harry. Yes, so you're in the overbought area. So at this point, I wouldn't be buying. I'd be watching to see if it's still heading up and setting my stops at levels that it shouldn't come back and trade through. Buyable, okay. Did I mention ZCO? Not that I recall. And I don't know what ZCO. No, we did ZTO, which is a bearish engulfing. All right. Okay, so with that, Jim, go ahead and do the double line. And try to keep your requests to 1 so we can get the tractor back in the barn tonight. I would stay long, but I'd use today's low as a stop on this one. FGEN. First Solar. That one is a viable buy. You can see how you had a lot of indecision down here and a little inverted hammer. You can buy this one. Also, with it breaking out through this level, wave 3. GMAD short, yes. That's a bearish bearish evening star signal, failure rate at the 50, gap down. Best friend, this is wave 1. Wave 3's got a lot more downside. Valero, if you're short, you stay short. But probably at this point, with it supporting right in here, I wouldn't be long or short. If I was short, I'd use today's high as a stop. And Sabre, nothing. That looks about as flat as a pancake. If you're thinking of buying it, I'd be more apt to buy it if it came back up through the open of whatever day, Thursday. LTHM, there's kind of your best friend breakout. This one you can buy on positive trading, getting up through the 50-day moving average. DYNT, good chart. You can buy this one also. Just make sure your volume is big on this price stock. And Thunder Bridge. That one looks like it's an extremely low volume until today. So just be careful of your volume on this one. AMRS, you stay long. I'd probably use maybe today's low, more than likely the open of Thursday as a stop. It should stay in this direction, the fry pan bottom. If it starts trading lower, it's coming back to test the T-line. Hoya, good breakout on a trend kicker signal. Grubhub, that one you stay long. Use today's open as your stop. SNBR, another one where all you can do on this one really is stay long as you stay above the T-line. Another little trend kicker type signal. SBSW. Whoops. SBSW. Today's high matched the high of March 6th. Not really. Oh. Yeah, not really. All you should be looking at is what's it doing right now. And it looks like it's trying to break out through this resistance level. Let's see, this Conagra. You can get ready to buy this one. Little Doji best friend. Oh, Cabot, not ConAgra. And getting ready for a doji sandwich. So you get ready to buy this one on positive trading. ZS. This one has to open positive to stay in it. If it opens lower, you can see the shooting star is giving you trouble getting through this level right here. YCBD, another kind of breakout. Make sure your volume stays good on this one. Use your 10-minute chart now. Sienna, another breakout with a kicker signal. Should be more upside. HZNP. That one you can be buying. Notice how it's drifted back. As soon as they hit the T-line, then it started back up again, which is a good indication. And this one, kind of with your Morningstar signal, maybe a double doji sandwich, I would stay long on this one. Mark, bought, is that a symbol? So is it down? Yeah, I don't know what to tell you there. IMAX or IMUX. That one should be coming back up to the top of the channel. Abbott. You can buy this one. It's not going to be very exciting. It's an institutional trader. But you're bullish engulfing 45 degree. You've broken out through this level. You stay long. Just use the T-line as your stop. And Chegg, stay long. Use today's low as your stop. Because if it comes back down through there, it's pretty much telling you this level right here is failing. It needs to open positive and give you a doji sandwich breakout. ZTO, bearish left-right combo. You can short this one on weakness tomorrow. Yeti. Bearish left-right combo. You stay long, you put your safety stop just below the T-line. If it comes down through there, the bears have taken control. RVNC, little trend kicker after a bullish harami right smack dab off the T-line. Stay long on this one. Bidu, I think we did that one earlier. That one broke out to the upside very nicely on a best friend type signal. Look for a 45 degree off of here. This is one of the Chinese stocks. Big breakout. Make sure your volume is good on this one though. And Boeing, nothing yet. You're still stuck sideways on this one. Work, nothing here. I wouldn't be long or short. Nail, nothing yet. It's trying to break out, but nothing real strong just yet. See what the Home Depot, nothing there. Lowe's, nothing there. Toll Brothers, nothing there. So, yeah, that whole sector is not moving just yet. Beazer Home still sideways. I think we did Sabre, nothing. Quark, that one you can be buying. Doji, kind of a double doji setup. What did I look at today that also had a double doji setup? That one. You double doji. This one you can still be, you can still buy this one with your classic. LVGO. American, nothing. Would be someplace else. Southwest, same scenario. Alaska, yeah, nothing to get real excited about on the airlines. And PCG, this one, if you had, yeah, you should not be in this one. Probably wouldn't be long or short. I'd be more apt to be going short if it came back down through this level. SYY, nothing there either. Not going anywhere. The SPY still heading up, probably at least coming up to fill this gap. And I'm guessing the futures are still up a little bit. Sprouts, that's a nice J-hook pattern. Morningstar signal, and you're right here at this level. This is kind of your methods rising. Very close to a methods rising. They didn't quite close it below this level, but they didn't quite close it above that level. You can still be buying this one on positive trading. At what point do you think Tesla will have overstretched away from the T-line? Well, if they have recommended, or somebody's upgraded it to 1500, yeah, anytime it starts getting up here, I would be going to my 10-minute chart. That's getting pretty far away from the T-line. XLNX, that gap up, best friend through the resistance level, look for a 45 degree, probably along the same trajectory as that. And TRIP. Nothing of any great magnitude on this one. If you're long, you can stay long. If you're thinking of going long, I'd put a buy stop just above the highs of the last 2 trading days. Paycom, another one that if this opens lower, I'd be out of it. You can see it's having trouble getting through the resistance level. Plug, stay long. Your trend kicker signal, but you're a good fur piece away from the T-line in the overbought area. Your safety stop is right here at today's open. For option trade short term, only need to look as far as, yeah, I'd only be going out to the 17th right now. And again, you could get a little bit more flexibility with some that have weeklies, where you might go out another week or 2 after that. Coop, left-right combo, but closed at the 3T line. If it opens lower, it's probably at least coming back to test the T line, which will probably still be a function of how the market's open tomorrow. And ARCT, that wedge, makes it very easy to project, basically saying it's probably going to open or trade in the direction that it opens tomorrow, which also would be a function of the overall market. VIPs, if you went long today, you stay long, but it has to open positive. Ovid, if you can short it, I don't know what the volume is on Ovid, but yeah, you could short this one, kind of a wedge that kind of breaking down to the downside. It wouldn't be the best one to go short. We did Labu, but you could short it. And this one was one of the ones I think got the turned down. Are they the ones up there in North Dakota? PC. I don't know what PC. This webinar platform is junk. It's time to go to something new. I don't know why that is, Serge. Other platforms don't have the capabilities of being able to talk back and forth during the day. LVGO, you want to still be a buyer of this one on positive trading. WRTC. Good breakout, you stay long. Yogi and Boo Boo have the Yeti, all right. Oh, GNAC is a Canadian stock, all right. You stay long on this, make sure the volume is good. ATRS. Nothing wildly exciting here. If you're buying it, you still have to break through the 50. Yeah, that's kind of a, nothing chart right now. This one with a doji sandwich setup, watch to see if they can get it up to the 200-day moving average. DFEN wasn't doing too much of anything. Whoops. Oh, DFEN doesn't come up on this platform, and I don't know why. RK, these are all probably going to be just the same. Nothing on Halliburton. Nothing on Occidental. Nothing on Apache. These are all sideways. And PBF, nothing there either. Gold. You can get ready to buy this one on positive trading. That's a red candle, so if it opens positive, you got a bullish flutter kicker. You want to be buying them immediately. Freeport. Yeah, Freeport had a nice breakout today. Yeah, I shouldn't even ask about the futures because they mean nothing until about 5 minutes before the market opens. Oh, District of Columbia, all right, it wants to become a state. T-Dog, still having a hard time breaking out into new territory. You have a bearish engulfing. Your safety stop is just below the T-line. Oh, that was the Appalachian Trail. Yeah, I heard the news, but early this morning. And CrowdStrike backed off. You still want to be a buyer of this one, especially if it comes back up through today's open. Crone. Crone you can buy, kind of a doji or a cradle pattern down here. Not a great chart. You just have to watch to see what happens once you get up here to the 200. So here's your strongest chart. The NASDAQ gapping up through the resistance level, indicating we might be in for a lot more upside. So right now, all you can do is stay long as everything stays above the T-line. Domo, use today's low as your stop. Okay, let's skip you way past your bedtime. We'll see everybody bright and early in the morning. We'll see you then.